That introduction. My name's Cindy Murray. I'm from Kentucky, and yes, I have a Kentucky twang I'm proud of, so get that out of the way. So my background, I spent 33 years in Kentucky state government, including helping with healthcare reform, doing the Health and Family Services budget for the legislature, and my last role was Chief Financial Officer, Cabinet for Health and Family Services. I retired from that, and now I am a work-at-home Medicare sales agent. And I'm enjoying the heck out of that. So I just wanted to go over a few to start this out. Key insurance industry trends for 2021. This is according to One Incorporated. There are really 12 industry trends. And that includes, we've now, of course, COVID-19 has impacted every industry everywhere, and the insurance industry was definitely not left out of that. So now we've got a remote access environment. A lot of agents, including me, who were used to going out into people's homes to help them with COVID, that changed, and we've got now more of a virtual environment where you work from home, do virtual appointments with customers, and actually I think that's a really good trend. And contactless payments, where you're able to set up their payments over the internet, and I think the clients may feel a little bit more comfortable with that. Let me see. Virtual customer experiences. Most of mine, I work like a call center right now, and I get nonstop inbound calls of people wanting information on Medicare, and eventually we hope to sell them a policy. But there's no, visionary seeing the person. They don't see me or anything like that. They're just able to, sign up for their Medicare plan or change it online. Let me see. COVID-19 legal challenges. I'm not sure what the life insurance industry has really done with COVID-19, if they're denying claims, because I couldn't see them actually being able to do that, because that would cause legal challenges, and I do still sell some life insurance too. I'm not seeing a lot of difference in in the questions for life insurance so far. Okay, number 5, environmental, social, and governance factors. Over the past few years, ESG analysis, the consideration of the company's environmental, social, and governance factors when determining the value and sustainability of that business has become increasingly important in the financial industry. InsurTech explosion. Everything in the insurance industry right now is geared towards using definitely artificial intelligence. I can't imagine trying to do my job without it. So that's a big improvement. I expect more improvements in that, make us more efficient and more where we can spend our time taking care of the client's needs. Okay. Robotic process automation, RPA. Insurers are using RPA to digitize repetitive or rule-based administrative tasks. It's commonly used for the purposes of conversational process automation, which includes chat boxes, interactive voice response, and virtual customer assistance to handle routine communications and transactions. Of course, the pandemic has had an economic impact on the insurance industry, particularly in property and casualty claims, and also, the health insurance, having to pay for those patients that come down with COVID and they have to stay for months and months in the hospital. Somebody has to pay for that. Let's see what else. Auto insurance reveals there's a significant decline in commuter traffic in 2020, leading to a surge in consumer interest in pay-per-mile auto policies. I'm from Kentucky, and we definitely had decreases in our auto insurance because we weren't driving as much. Okay, travel insurance. Few industries were hit harder by the pandemic than the travel industry. Between the cessation of nearly all unessential travel and the associated trip cancellation, claims travel insurance had a tumultuous year in 2020. Workers' compensation, the dramatic spike in unemployment insurance claims that resulted in a sudden drop of workers' comp policies and claims for that. I think employment growth. Unfortunately, the 2020 recession caused a massive increase in unemployment in the U.S. However, insurance did not experience quite the same level of job loss as most sectors, in part because of the insurance industry's ability to quickly adapt and have workers work some from home or whatever. So, but again, it was like a think fast thing. It had to be done immediately. And there was ongoing uncertainty and agility. After an extraordinary year of public health, social justice, and climate emergencies, business owners, employees, and consumers alike have developed a new outlook on life, perhaps permanently. So anyway, that's about all I've got to start out with. I'm going to let Stephen,
Thank you. Thank you so much, Cindy.
Uh-huh.
All right. All right, how's everybody doing today? I want to start off by introducing myself as well. Thank you, Cindy, for giving us an insight on that. We really do appreciate that. My name is Stephen T. Keys. I am from the city of Chicago. My background is in accounting and tax. I do own an accounting and tax service where we offer sales tax, payroll tax. We do everything that has to do with helping small businesses to individual taxes as well, okay? Some of the things in this ever-changing world, especially due to COVID, has had an impact on a lot of industries. And the majority of most industries, including the insurance, as Cindy mentioned earlier, a lot of people were able to step away from the office and utilize like a home office space, okay? And this has been tremendous. This has been something that pretty much changed the course of the way we view finance, because now that's where technology will come into play, okay? And in our financial industry, in order for us to keep those sales, in order for us to keep our clients and our customers happy, we had to learn to adapt because we were facing something that was new to everybody. And as everyone knows, the financial industry is really tough. So I'm gonna start off by saying one of the things of what is a premium, okay? A premium is the amount of money you pay an insurance company in exchange for an insurance policy. It can consist of a number of things, okay? And it's that goes into calculations of the insurance premium, okay? Now, with the way that the world is going now, taking advantage of the digital world is where we would benefit more versus doing it from 10 years to 15 years ago, doing it the old way. So as the world heals from this pandemic, I do believe that the digital world will now, I don't think that it can go back to ever being the same as it was before, okay? So yes, change is coming. with the different types of life insurance that we need to take advantage of would be, we have our term insurance, and we also have what is called the universal variable, okay? Those two are really good because, see, when you think of insurance, you think you are supposed to receive money when someone dies, okay? But how about taking advantage of that money while you're alive? And that's why we call it life insurance, okay? A lot of people don't know you can build cash value, okay, when it comes to building that wealth of insurance, and you don't have to wait until someone passes away to take advantage of that, okay? So insurance companies, it is said, and I was going over a couple of articles that I saw that was pretty good in the 2021 trend of insurances, okay? But a lot, the financial report says that 21% of customers say their insurance providers do not offer any customizations, okay? The same research indicate that 80% of customers are craving personalized offers, and 77% are willing to trade their behavior data in exchange for lower premiums and quicker settlements, okay? Now, as we enter into the 2022 year, we don't know what it really may hold. Personally, I believe that this is something new for everybody, and we're still learning to adapt. No matter what the data says, no matter no matter what we may think, we're entering into that era, guys, to where we have to take advantage of this technology, okay? It's like everything today, it's so amazing how you can you can just pull up one thing on your cell phone, and that's like your whole computer, okay? So you can go to a bank, go checking your bank accounts, bank apps. You could download your insurance app. Now insurances are coming up with ways where the person doesn't have to call that actual person. Everything could be done through a chat, okay? And that's a part of the digital world too as well. So we are moving from a time where things aren't going to be the same. But as I go over some of the things that a lot of customers want, and as I was looking at this, it's so amazing that the data actually says that people are comfortable with the digital. So if you can just get a person to have a computer, whether it's a tablet, desktop, to a cell phone, okay, with the internet on it, that is the way of the world today. You can go and check anything on that cell phone, on that tablet, on that computer, because that is the way that the world has changed too. Cindy, do you have anything that you would like to input?
No, I can say another trend in the insurance industry is people are living longer. Like I said, I talked to a lot of elderly. One thing that's a little bit disturbing is I don't know how many 80, 85, 90, 99-year-olds I've talked to that are out there in their homes by themselves, and they don't really have any support. And some sound like they're capable of doing that and some don't. But the fact that people are living longer and they're not getting, some are not getting as sick as before. So that might be a good trend for the insurance industry that I hate to say it, but I mean, insurance companies are in business to make a profit. That's why they're in the business on not the only reason they're in business. They're in business because they like helping people, but that age trend means we're going to keep getting their premium, monthly premium, for longer and longer. But they're all, I totally, absolutely agree with the life insurance. I like the fixed index universal life policies. They don't have guaranteed returns of maybe like 0.5%. But if you watch their trends over like 20 years, their average gain is like 8%, where you're not going to get that much of a return in any bank. And building cash value that you can borrow against, the living benefits, absolutely. I think you can borrow up to 90% of or not borrow, if you end up with a terminal or a chronic illness, you can get access to like 90% of it, so then, and you don't have to pay it back. But also the FFIUL, the cash values, at some point, if you keep that policy long enough, you're not only going to get the face value, but you're going to start getting the cash value added together as an even higher death benefit than you otherwise would have gotten. So, I spent a lot of time selling life insurance too. And those are the type of policies that most insurance agents will get on themselves too. You can build up retirement that way, tax-free retirement. It's not taxed when it gets taken out. But also, one thing as an insurance agent, I really wish that people would go and get your grandchildren insurance, whole life policies while they're young, and they can get it really cheap. I just got another $100,000 on my grandson for $37 a month. And that's set for his whole life at that amount if he keeps it later. But
yeah, and I totally agree with you, Cindy, because it's important for us to have insurance. That is one. If we're not gonna spend anything or like for our household, I would say start with that insurance first. Because that's something that you can pass down. If something happens, God forbids, to anyone, in our household, especially with the way that the world is now. Like I could take myself for an example. I have a couple policies myself. I do have a term. I have a variable. Okay, those go hand in hand. So I am able to put money in and watch it grow. The goal is to watch it grow because as the world changes, we have to think about the family, our families, and that is one good asset to start, especially when it comes to saving or watching your money grow. Yeah.
plus the other thing, how many funerals have you all been to? When somebody passes away, that's the first thing the family's going to ask, or whoever, is how much life insurance did they have? And unfortunately, there's a lot of people that put it way off until they're 70, 75, and you can't get that much then. You need to get it when you don't need it and get it early when you're still healthy enough to get a good, a good rate on your policy. But I also see in the life insurance industry, and I credit artificial intelligence to this, it's a whole lot easier to sell a life insurance policy now than it used to be. Not that COVID-19 was good, but it's changed to where we can sell it virtually, and the companies are now allowing us to do that. I don't know how many 3-hour round trips I went on to get down there, and guess you have an appointment, guess what? They're not there, and they won't answer the phone after that either. I even had one lead that dropped me off in the middle of a prison parking lot. And any other improvements in the insurance industry, especially the leads, if you're going to try and make a profit off something, and this is all, the insurance policies are wanting good, solid leads to people who really are wanting the product, and it's still, there's probably a lot of room for improvement there because they get a lot of leads from people that they're not interested, they sign them up and say, we'll call this person anyway, but So, and the company I'm working with now, selling Medicare, our focus is on your call ratio. Out of like 10 calls, how many policies did you actually sell? And also our time spent on actually in the computer system, looking for the people that are wanting to get like Medicare policies. Same thing goes with life insurance policies. Car insurance, the same thing. They depend a lot on leads. And if you get a bad batch of leads, you're stuck with it until you find a company that will get you better leads, because that's what ultimately is going to lead to having a policy and being able to make a profit and taking care of the people that are requesting whatever insurance it is. So, so anyway, are there any questions out there, or does anybody have any experiences, especially that your company experienced when COVID first happened? Any input at all?
Yeah, any questions?
I can still go over. I've got a few things from Deloitte. I do have a report from Deloitte and Touche, a well-known consulting firm, and they came up with their trends in the insurance industry as well. They've got a big article about it. They said 2021 insurance outlook, accelerating recovery from the pandemic while pivoting to thrive. Where the insurance stand as they enter 2021, what a difference a year makes, or even a few months. The COVID-19 pandemic and resulting economic fallout radically shifted consumer and employee needs, habits, and expectations, while compelling virtualization of insurance operations practically overnight. I know right after COVID happened, I was working for Allstate at the time, and we had the choice whether we wanted to keep our doors open and keep selling out of an office, or if we wanted to try and work from home or just sit out. And we decided, of course, to go into the office with limited contact from the public. But those first few drives right after that happened, it was like driving in a ghost town. I mean, everything, this was in Kentucky, everything just screeched to a halt. So we got through that. A global outlook survey by Deloitte's Center for Financial Services found that many insurers know they still have their work cut out for them, even after spending most of 2020 adapting to the outbreak's impact. 48% of 200 responding insurance executives agreed that the pandemic showed how unprepared our business was to weather this economic storm, while only 25% strongly agreed that their carrier had a clear vision and action plan to maintain operational and financial resilience. Pandemic losses hurt the property casualty bottom line. To illustrate, North American property casualty insurers saw first half annualized GAAP operating return on average equity fall to 2.8% from 8.3% the year before. That's a huge impact. And, being from a business background, of course, your investors are looking, you've got to have a profit out there. You've got to have a return on investment. If you don't, you're dead as a company. Okay, let me see what else they went over. Looking ahead to 2021 and beyond, businesses must concurrently manage three key phases of the COVID-19 crisis: respond, recover, and thrive. When the pandemic emerged, insurers responded by taking immediate steps to ensure business continuity and help customers and their communities cope. As they head into 2021, insurers should consider a mix of offensive and defensive actions to accelerate longer-term recovery efforts and pivot to the thrive phase when growth is re-emphasized despite challenging economic conditions. You know, and we could go on and on for hours discussing this topic. I know just from the Medicare side, the biggest requests I get are to address people's dental and pharmacy needs.
Cindy.
And,
Well,
Okay.
actually, I got a comment. You had said you wanted somebody that works in the insurance industry to provide some additional insights. I work for an insurance company. I'm the internal auditor for Encova Mutual Insurance Group. We do property and casualty. We have a life insurance arm. We do heavily into the workers' compensation side.
Okay.
So let's talk a little bit about life insurance. You had made a comment about, you know, with COVID, were there any effects with respect to life insurance? We are still obligated to pay life insurance claims no matter, you know, how the individual passed away, whether it was from COVID or some other thing.
Okay.
But on the underwriting side, what we started doing is looking at things like comorbidity. So we revised our underwriting criteria a little bit so that if there was an individual that was over a certain age or had a certain health thing, that we may not provide them or may not offer that type of insurance to that type of an individual. So we revised our underwriting criteria. For automobile, what we saw was, as you had said, we saw a decrease in the frequency. People weren't driving, people weren't getting into accidents as often, but what we did see was an increase in the severity. And you know, from personal experience, I drive into work every morning. I was driving into work when, you know, it was a ghost town and there was nobody going into work. And there were people that were on the two-lane highway doing 80, 90, 100 miles an hour, zooming past us. And I think what we're seeing now is that people still are in that mindset, even though people are starting to go back to work. And so when the frequency is starting to the severity is outweighing the benefits that we got from the reduction in frequency. The other thing we saw was a significant increase in litigation. We offer workers' compensation insurance. We have a provision in our workers' compensation policies, which is something they call ISO language, which specifically excludes pandemics. And yet we still had some states that were trying to pass legislation to retroactively take that away, even though it's a contract. And you can't change a contract retroactively. They were trying to do that. So there was a number of litigation cases related to that. Now, there are instances in workers' comp where we did pay claims on COVID. People that were in the healthcare industry, first responders, things like that, where they could show that they got the COVID as a result of what they were doing. But we couldn't pay claims on somebody that got COVID and you didn't know where they got it from. I mean, they could have got it from home. We don't know. And then the last thing I would say with respect to the work environment in our company, if you had asked us pre-COVID, you know, what our philosophy was on work from home, it would have been, we strongly discourage it. And when COVID hit, we pivoted, and it was amazing. The amount, how quickly we were able to adapt to this new method of doing business. We had, right now, I think we've got 80% of our employees are working remotely, and it's working. Now, obviously, there's some areas that can't work remotely. You can't have your mail room working remotely because somebody's got to, you know, to go through the mail and make sure we're getting the checks and things like that, because there are some people that still mail us checks. And our facilities, we got to have somebody that's there to make sure that, you know, the building is secure and things like that. So that's kind of this perspective that I have on it. So there was some impacts on it, but for the most part, insurance industry as a whole, it was amazing how we were able to continue to do what we were doing despite some of these roadblocks and bumps in the road that were coming as a result of the COVID pandemic.
So how does your company feel about selling life insurance without the agents actually going into the home and meeting with them,
It was difficult. Now, we have independent agents. We don't have captive agents. But our president of our life insurance company said life insurance is a difficult product to sell anyways. Nobody wants to buy life insurance because basically what you're saying is, I'm putting money aside for when I die. And it's like, well, what benefit is that going to be to me? I mean, that's still the mentality. Obviously, you got the life benefits and things like that they're not fully aware of yet, and hopefully that'll come about and people will see the benefits of that. But to your point, it's not something that you can sell over the phone. It's something that you got to convince people to buy. It's something that you got to walk them through how this process works. You know, you're going to pay money in. Here's the benefits that you're going to get. You know, here's what's going to happen if you know, you get a critical illness. Here's some riders that we can put onto this. It's not something that can go over that you can do over the phone. And as a result, you know, we saw some impacts from that. Our sales on life insurance policies went down. But the other impact that we had from a life insurance perspective, life insurance is what they call a long-tailed product. You try and match the investment income that you're getting against what you think your claims are going to be. And so, you know, we invest in conservative investments for obvious reasons because, you know, they're fairly stable, they're safe. But when you're investing something at, you know, less than a 1% interest rate, it just doesn't work. And so what we had to do is we had to start looking at alternative investments. We started looking at private placement loans. We started looking at you know, things that you typically wouldn't see an insurance company getting involved with, things that are still safe, you know, relatively safe, but not as liquid. But if you're in a life insurance company, you don't need the liquidity. You know, you can set yourself up for a longer duration so you can hold on to an investment for a longer period of time before you have to cash it in. Does that answer your question?
Yes, thank you.
You're welcome.
So did you, for your liquid investment, did you invest in the wine?
Well, wine, yeah, wine's liquid, but, you know, the thing that concerns me, the reason I asked that question, I was making a joke about the, you know, wine being an illiquid asset. But the reason I was asking the question also is, you know, wine is something that, it's not like gold, it's not like platinum. You know, it'll age and then it could turn into vinegar. So it could lose value based on, you know, the fact of how you're storing it or something like that. You know, art, you can buy a piece of art and, you know, it's probably going to increase in value, but wine is one of those strange ones. I would never invest in wine because I'd probably end up drinking it.
But there really is an investment thesis for wine investing. They actually, there's a group from Europe that actually does recommend, they have a wine investment portfolio. And it's kind of doubled its, but I would never invest in them because I would rather drink them. I'm with you there.
Anybody who does want to, my Aunt Phyllis loves wine in the box, and she drinks a lot of it. So you might want to invest in that. But I think with that, we're at time. So I wanted to thank everyone for your participation, and then also for the two of you for a great fireside chat. And we'll move on to the next thing. Thank you very much.